A good day to you. In this lesson, we are about to discuss the evolution of central banking. You might recall that we discussed about the evolution of central banking in brief during the previous lesson. I think that you may have got a basic understanding on how central banking was evolved. Since the 17th century, functions of the central bank have developed and evolved drastically. Now you can see on the screen the sections that we are going to discuss under this lesson. The basic purpose of a central bank in a country is to provide the required economic strength in maintaining a stable government. Let's discuss this in detail. Looking back in towards the most basic purposes of a central bank was to provide the exclusive monopoly control in production and issuance of money, be and act as the lender of the last resort in financial crisis situations, and control interest rates in the open market operations by intervening in the large financial transactions. The importance of having an exclusive monopoly to control the production and issuance of money at single authority is that if anyone can produce or issue money, the value of the currency will diminish and the economy will crash. Hence, the exclusive authority should be kept with a single authority to have a proper control. As we have learned previously, we know that the central bank is the banker to all banks and financial institutes. In a financial crisis situation and a run on bank occurs, such banks need to have the option of borrowing from the central bank to meet the commitments as the last resort. As the central bank of a country, in order to maintain the confidence of the public in the financial system, they have to intervene and be the lender of the last resort by providing financial aid to any bank which is at a crisis unable to pay back its depositors' money. This is an important activity in safeguarding the stability of the financial system and the country's economy. In an economy, inflow of money and granting credit give the public opportunity to spend and capacity of purchasing. This will create an additional demand for goods and services, and with this, demand prices of goods and services increase. This will create an inflationary situation. We will discuss about inflation on the next slide. In controlling this situation, the central bank will have to intervene in the open market operations in controlling the interest rates, which will impact the credit creation process. Inflation is the rate at which the general level of prices of goods and services are rising, and consequently, the purchasing power of currency is falling. Central banks attempt to limit inflation in order to keep the economy running smoothly. An economy of a country is considered to be stable if the inflation rate is low. In Sri Lanka, by the end of December 2017, the inflation rate was 7.1%. At the time the Central Bank of Sri Lanka was established, the initial objectives were set up based on the Monetary Law Act No. 58 of 1949, which was in force at that time. Now let's take a look at those objectives. You can click on each of the objectives which are displayed on the screen to get details of each of the items. The stabilization of domestic monetary values is simply maintaining the domestic value of the Sri Lankan rupee. The primary contributor for the drop in value of the rupee is the deficit in the balance of payment in the country. In other words, the domestic production and the requirement to import goods and services from outside the country. We can understand this through a simple example. In our daily conversations, we do talk about the fact that in terms of cost of goods, that if we could have purchased something using 100 rupees sometime back, it will cost us 180 rupees if we try to purchase it today. This means that the value of 1 rupee has dropped over a period. The exchange rate is the value of one currency for the purpose of conversion to another. This conversion factor is a direct contributor to an economy of a country. Current exchange rate of $1 is 152 Sri Lankan rupees as at January 2017. We can understand this through an example. If the US dollar value increases against the rupee from 152 rupees to 160 rupees, the cost of imports increases and the receipt for exports reduces. That is why when the exchange rate increases, there is a tendency that the price of fuel increases, since fuel is not produced in Sri Lanka but we import them from abroad. Having high level of employment and production will have its own benefits for an economy. If an economy is driven by domestic production, country's gross domestic production increases. It is one of the primary indicators used to gauge the health of a country's economy. It represents the total dollar value of all goods and services produced over a specific time period. You can think of it as the size of the economy. Similarly, if there is a high level of employment opportunities, the per capita income increases. This is a measure of the amount of money earned per person in a country. It is also an important economic indicator and used as a means of evaluating the living conditions and quality of life in different countries. If both these indicators are at high levels, a country's economy is considered to be stable and developing. Productive resources are often classified into three groups: natural resources, human resources, and capital resources. It is very much important to develop country's resources as it ultimately contributes to the economy. Let's try to understand this with a simple example. As you know, Sri Lanka is best known as a tourist destination simply because we are a country enriched with natural beauty. These resources are beautiful natural waterways, beaches, the green trees and flowers, attractive scenic landscape, and locations with rich culture and tradition. As we know, tourism is a major contributor to our economy, and as the central bank, it needs to promote the development of these resources through allocating funds for research, preservation, and promoting in view of increasing income generated from tourism. In keeping up with the worldwide trends in central banking and the rapid changes in international financial markets consequent to the economic liberalization and the significant advancement in information technology, the central bank embarked on a modernization program in 2000. Accordingly, the objectives of the central bank were changed, however, while covering the initial objectives through current objectives displayed on your screen now. Since these objectives have to be in line and in response to the changing economic environment, the objectives are considered to be the main functions of the Central Bank of Sri Lanka. The Central Bank of Sri Lanka is entrusted with the responsibilities of being the economic advisor and banker to the government of Sri Lanka, as well as the agent of the government of Sri Lanka. Let's take a look at what functions the Central Bank of Sri Lanka undertakes in discharging these responsibilities. Price stability safeguards the value of the currency in terms of what it will purchase at home and in terms of other currencies. We learned previously that price stability or stable prices mean low inflation. We know that the economy performs well when inflation is low, and hence the responsibility of the central bank to maintain it at low. As such, the central bank should have an expanding monetary policy which increases infusion of money to the economy when prices are in a downward trend, whilst a contracting monetary policy which reduces infusion of money when prices are in an increasing trend. When interest rates are also low in a low inflation situation, allows an economy to achieve its growth potential and promote high employment. Since both consumers and producers are free from the disruptive effects of high and variable inflation, both parties can make economic decisions with confidence. Similarly, deflation is a decrease in the general price level of goods and services. Deflation occurs when the inflation rate falls below 0%, which is a negative inflation rate. Inflation reduces the value of currency over time, but deflation increases it. Generally, it is believed that deflation is also a problem in a modern economy. As such, the central bank will ensure stability of economy through maintaining a price stability by implementing appropriate monetary policies. Low inflation or price stability fosters sustainable long-term economic growth and employment. A stable financial system will create a favorable environment for depositors and investors in the economy. It will further encourage efficient financial intermediation and effective functioning of the markets, and hence promotes investment and economic growth. We can say financial system stability means the effective functioning of the financial system, which consists of all the financial institutions and the financial markets, and also where either banking, currency or balance of payments crisis does not exist. Usually, financial instability is caused by bank failures, excessive asset price volatility, and collapse of market liquidity or a disruption to the payment system. Financial system stability requires a stable macroeconomic environment, effective regulatory framework, well-organized financial markets, sound financial institutions, and safe and robust payments infrastructure. The Central Bank of Sri Lanka maintains the financial system stability through a series of important activities for prevention, detection, and reduction of threats to the financial system as a whole. This series of activities involves the surveillance of markets and supervision of financial institutions, having oversight of the payment system and its management, and resolution of possible banking crisis situations. Further, the function of supervision of financial institutions covers the following types of financial institutions, which are the components of the financial system. Regulation and supervision of banks. The regulatory and supervisory function relating to banks licensed by the Monetary Board is carried out by the Bank Supervision Department of the Central Bank. The supervision of banks is based on the internationally accepted standards for bank supervision set out by the Basel Committee for Banking Supervision. Regulation and supervision of finance companies and finance leasing establishments. The Department of Supervision of Non-Bank Financial Institutions of the Central Bank carry out the regulatory and supervisory functions in respect of licensed finance companies and finance leasing establishments, with the objective of ensuring that these institutions comply with the minimum prudential requirements stipulated by the Central Bank. Regulation and supervision of primary dealers. The Central Bank is empowered to regulate and supervise primary dealers. The Public Debt Department of the Central Bank is responsible for supervising primary dealers. We learned previously that the Central Bank of a country has the authority and monopoly of issuing currency, which are legal tender. In Sri Lanka, the Central Bank of Sri Lanka is empowered to issue currency of all denominations. Currency issuance has a direct correlation to the economy. If anybody could issue currency without having a monopoly condition, there will be excess supply of currency in the market due to uncontrolled issuance, increasing higher purchasing power. This will result in an increase in demand for goods and services, which will ultimately increase prices and will lead to an economic crash. This is the very reason that a central bank is entrusted with the exclusive authority and responsibility issuing of the currency and its management. The central bank issues currencies with the backing of reserves of the country, which comprised of net local and foreign reserves. The Employees Provident Fund was established under the Act No. 15 of 1958 and is currently the largest social security scheme in Sri Lanka. The aim of the EPF is to assure financial stability to the employee after retirement life and to reward the employee for his or her role in the economic growth of the country. According to the EPF Act, an employee is required to contribute a minimum of 8% and the employer a minimum of 12% of the total salary of the employee monthly. Employees and their employer institutions and establishments of the private sector, state-sponsored corporations, statutory boards and private businesses are required to contribute to this fund. The administrative aspect of the EPF is handled by the Labour Department of Sri Lanka, whilst the management of the funds is entrusted to the EPF Department of the Central Bank of Sri Lanka, who will invest the funds in view of providing a positive rate of return while safeguarding the value of the fund. Employees will have benefits such as obtaining loans against the balance during employment in an emergency or get the total collected funds released upon retirement. The responsibility in foreign currency management is entrusted to the Department of Foreign Exchange within the Central Bank of Sri Lanka. Department of Foreign Exchange was initially established under the Foreign Exchange Act No. 24 of 1953. It is critically important that the foreign exchange rates are stable without being heavily fluctuated for an economy to be stable. However, the foreign exchange rate decision has a correlation to the demand and supply of foreign currency. This is further having a relation to the balance of payment of the country. As such, the Central Bank of Sri Lanka has to control and maintain the stability of exchange rates through exchange rate policies. Now you can see some of the important functions of the Department of Foreign Exchange on the screen. The foreign exchange rates increase at times where the demand for foreign exchange increases. For example, this happens when there is a high demand for imports, where the demand for foreign exchange increases as the settlement has to be made for foreign currency. This will result in an increase in the foreign exchange rate. In such situations, central banks will implement policies where certain tight controls are set on imports to reduce the demand. The balance of payment account of Sri Lanka is the deficit between the foreign receivables and payables. As such, a change in foreign exchange rate will either increase or decrease the deficit and create a direct impact to the account. Being the agent for the government of Sri Lanka, the central bank is entrusted with the responsibility of managing the public debt, which is, in other words, the government debt. Accordingly, the Public Debt Department within the Central Bank of Sri Lanka will carry out following functions on behalf of the government: controlling and managing domestic and foreign debt obtained by the government, issuing debt instruments and handling all matters relating to servicing the domestic and foreign debt of the government. Usually, the domestic debt is obtained in achieving short-term objectives, whilst the foreign debt is obtained in achieving long-term objectives. Proper identification of funding needed sectors and in what amounts, as well as distribution and proper use of such funds, are also part of responsibility under this division. In Sri Lanka, budget deficit is met through public debt. As such, assessment of capacity to timely repayment of debt is also an important function of public debt management activity. One of the agency functions of the central bank is the promotion of regional development initiatives through coordination among all stakeholders, namely the government of Sri Lanka, financial institutions, foreign donors, other lending agencies and beneficiaries, with a view to improving economic conditions of low-income groups and reducing poverty. These activities are established as per Monetary Law Act Section 33 of 2009. The primary objectives of this division are to promote lending programs of granting microcredit facilities to low and middle income segments using a donor and government funds. Further, providing advisory services and carry out supervision of the activities is also part of the objectives. The funds are allocated to the identified economic segments through participating financial institutes in the programs. The regional development activities are supervised and executed through the regional offices. These offices are directly supervised by the central bank. Now you can see some of the responsibilities of regional offices. The Financial Intelligence Unit of Sri Lanka was established in March 2006 in terms of the provisions of the Financial Transactions Reporting Act No. 6 of 2006 under the Ministry of Finance and Planning. Subsequently, the unit was reorganized as a department of the central bank in February 2007 in order to enhance its operations and to act efficiently to discharge its statutory functions by leveraging on the policy making and regulatory capabilities of the central bank. The main objective of the unit is based on combating money laundering, terrorist financing and other related crimes in Sri Lanka in line with international recommendations and standards. Now you can see those objectives on the screen. Financial intelligence can be broken down into two main areas: collection and analysis. The unit will collect raw transactional information and suspicious activity reports usually provided by all banks and other financial institutions as part of regulatory requirements. Data may be shared with other countries through intergovernmental networks. Analysis activity consists of scrutinizing large volume of transactional data using data mining or data matching techniques, along with cross-referencing with other related information to identify persons or organizations potentially engaged in suspicious activity. With that, we have completed discussing evolution of central banking functions lesson. Now you can test your knowledge gained on the lesson by answering these simple questions that are displayed on the screen. Let's meet again through a similar lesson. Until then, have yourselves a wonderful day.